On a seemingly ordinary day, the numbers began to tell a story of rapid change. Traders watching the charts for the Pi digital asset observed a distinct and sharp decline in its perceived market value. The drop was not a gentle slide, but a pronounced fall, registering a significant percentage decrease within a single trading period. This movement began with stark clarity on the very day that whispers of a major network update solidified into a formal announcement. As the price trended downwards, another crucial metric surged upwards: trading volume, falling price, rising volume. This inverse relationship is a classic market signal that often points towards a powerful catalyst, compelling many participants to sell. The name that echoed through trading forums and social media channels was GCV 314. Market observers identified that label as the primary driver behind the sudden shift in sentiment. The announcement that the GCV 314 protocol was nearing its operational phase appeared to be the trigger event. Understanding why a system update, typically a sign of progress, could correlate with a price downturn requires a deeper look into market mechanics, supply dynamics, and the forward-looking nature of traders who act on expectation as much as reality. The facts, stripped of emotion, are simple and direct. A price fell. The start date is known. Trading volume rose at the same time. GCV 314 was announced on that date. For anyone trying to make sense of the market's behavior, this sequence provides a logical starting point. The story isn't just about a price drop. It's about how anticipated changes in a network's fundamentals can affect value long before new code goes live. The market was pricing in a future it was trying to predict. To understand the impact of any update, one must first grasp the nature of the project itself. The Pi network emerged with a compelling and ambitious vision to make cryptocurrency accessible to the everyday person. Its foundational premise was to move away from energy-intensive mining like Bitcoin. Instead, Pi proposed that users accumulate coins by using a mobile app. They contribute to the network's security and growth through consistent engagement. That low barrier attracted a massive global user base. The project progressed through distinct phases. It began centralized to distribute the initial coin supply. Then it moved toward a decentralized, fully functional blockchain. Periods of testing, testnet, precede activation of the main public network, mainnet. Updates are therefore the heartbeat of progress. They tell pioneers the network is moving from coin accumulation to real utility and value exchange. The shift from a closed app wallet to an open network where coins can be traded, spent, used in applications is the transformation everyone anticipates. That's why a technical update like GCV 314 carries so much weight, a key to unlocking the next level. Pi's core promise has always been future utility. Users have been accumulating coins expecting tangible value in an open market. Years of accumulation with no free trading created a unique market dynamic. At its core, GCV 314 is simply a name, a technical identifier for a specific and significant update to the Pi network's operational protocol. While the name itself may seem cryptic, its function is to activate a new component of the network's machinery. Think of the network as a complex factory under construction. GCV 314 is like flipping the switch on a major assembly line that has, until now, been idle. This new functionality might enable more computers, nodes, to participate in validating transactions or allow for more complex tasks across the network. It's a move from potential to action. The network becomes more robust, more decentralized, and more capable. In any market, whether for apples or for digital assets, the relationship between supply and demand is the fundamental force that determines price. When a new system like GCV 314 begins to operate, it has the potential to significantly impact the supply side of this equation. Increased network activity does not magically create new coins out of thin air, but it can dramatically increase the available or visible supply. This means that coins that were previously locked, inaccessible, or simply sitting dormant within the network's internal ledger could suddenly become mobile and transferable, effectively entering the active marketplace for the first time. Imagine a large reservoir held by a dam. An update like GCV 314 opens the sluice. Each person sells a little. Millions create a tidal wave of supply. Traders preempt the impact, selling to get ahead of expected price drops. The reason an update like GCV 314 can lead to a lower price despite being a positive development is the market's immediate reaction to supply changes. When the market anticipates many illiquid coins becoming available, a predictable chain reaction unfolds. The first is fear of dilution. To protect profits or cut losses, they sell before the new supply hits. That preemptive selling pushes the price down immediately. That's why the price dropped on the announcement, not the activation. Imagine 100 paintings. A warehouse of 1,000 appears for sale next month. Prices plunge now. Activation can reveal more data. Large wallets, migrated totals, reshaping scarcity assumptions. Realizing sellable supply is larger can trigger another selling wave. Anticipated new supply, preemptive selling, and reduced perceived scarcity push price lower. Section 6. The Human Element, Trader. Psychology in action. Beyond the cold mechanics of supply and demand, one must always account for the powerful influence of human psychology on market movements. Trading is not just about numbers. It is about sentiment, fear, greed. When a significant event like the GCV 314 announcement occurs, it becomes a powerful psychological trigger. Herd behavior amplifies moves as traders mimic others without deep analysis. The sharp spike in volume is a numerical representation of heightened emotion. Information and misinformation spreads like wildfire. The drop is a collective psychological event. Numbers are symptoms. Belief shift is the cause. Section 7. Beyond GCV 314, markets are complex ecosystems where multiple forces can act at once. Broader crypto sentiment matters. If Bitcoin and Ethereum trend down, project-specific news hits harder. Regulation, exchange breaches, or collapses can chill the whole sector. Whale selling can overwhelm buy pressure regardless of fundamentals. Exchange rules, margin, new pairs can alter trading dynamics. GCV 314 is the likely primary cause within a broader context. The truth is often a blend of multiple contributing factors. Section 8. Navigating uncertainty and knowns. As the market digests the news of GCV 314, the most pressing question becomes, what happens next? The path forward has known milestones and significant uncertainties. We lack granular details on timing, mechanisms, and safeguards. The team could use phased rollouts or vesting to avoid shocks. This uncertainty is both a risk and an opportunity. Often, markets sell the rumor and buy the news once uncertainty clears. Focus on verifiable data and official Pi Core team communications. Section 9. A clear path forward. What to watch and how to act. In volatility, be a calm observer, not a reactor. Anchor to the numbers. Monitor the daily price change. Also monitor daily trading volume. Price falling on high volume equals strong selling pressure. Stabilizing price on declining volume can signal selling exhaustion. Watch network metrics, active nodes and large transfers. Primary action. Follow the Pi Core team on official channels. Secondary action. Have a personal plan aligned to your time frame. Watch 5 signals: price, volume, official announcements, active nodes, and large wallet movements. The price fell sharply on high volume after the GCV 314 announcement because the market expects more sellable supply.